we have Vanessa from CoinFund.io, who will be sharing their outlook on investing in blockchain and NFTs. You there with us today, Vanessa?
Yes, thank you so much for having me. I'm excited to be here and share our perspective.
All right, thank you. Take it away.
So hi everyone, my name is Vanessa Grellet. I'm the head of portfolio growth of CoinFund's. I recently joined CoinFund after working for almost 5 years at ConsenSys, which was one of the largest blockchain Ethereum-based companies in the space and a pioneer in the space. Prior to joining ConsenSys, I was working in financial markets, where I worked almost 10 years at the New York Stock Exchange, for PwC and other financial institutions. And I'm also a lawyer by training, which I try to forget and always say that I'm a recovering lawyer, but you know, it always comes back to you. So I'm excited to share our perspective today on the entire ecosystems where we see, you know, investment opportunities and how we try to capture them. I'm gonna share my screen, if that's okay, to, I cannot, I think someone needs to give me perfect permission. Does everyone see my screen? All right, so I'm going to start by, you know, laying out the agenda for today of my presentation, really talk about blockchain technology trends, how it's disrupting finance, digital services and marketplaces, and how we think digital assets of crypto networks are really how it's going to drive mainstream adoption. So in terms of the key trends that we see, of course, as we see in the news, and especially in the past, you know, 3 to 4 months, crypto is $1 trillion asset class. It has become so in 2020. The aggregate, you know, centralized exchange trading, and by centralized exchange, I mean Coinbase and Krakens of these worlds have reached new heights. We see a lot of activity also in stablecoin transaction volumes that attest to how dynamic the space is. We also see huge disruption in the space with legacy infrastructure and banks and asset managers who are starting to pay attention and are going beyond the POC level of what they were doing. We've seen that JP Morgan has issued its own, you know, stable JPM coin. We see that Fidelity is powering trading through its custody solutions. We see that ICE is also offering, you know, products and futures and options to allow for additional trading. So we see the entire financial ecosystem really adapting to this new asset class from different angles, whether it's you know, the trading side or the infrastructure side, and things are moving. They were moving slowly, but they're accelerating as we see in the past 2 years. The other key trend is the emergence of decentralized finance. For those who don't know what decentralized finance is, it's really a new global permissionless financial system where a lot of the trading patterns and interaction with the asset classes are automated in code, and you have emerging business models like automated market makers and other platforms that allow you to do things as an individual or in institutions that you were not allowed to do before. So personally, I can become you know, a liquidity provider in these markets. I can also lend my crypto and earn interest on it. And you know, the past year has seen an explosion of decentralized finance. At CoinFund, we still think, however, despite, you know, the headlines, et cetera, that we are still early in the space. Most of the founders of our fund and myself were very early, either in Bitcoin or the Ethereum ecosystem. But look, those were really laying the foundations for innovation in the space. And we see, as shown in my slides, sort of the resources that are allocated to this innovation are growing, but still small compared to, global venture or fintech investments. And I think it's going to grow exponentially in the coming years. So as we said before, blockchain technology is disrupting finance, digital service, and marketplaces. And I'm going to give a few examples of how it does that. So we've seen an explosion of the quote unquote digital asset industry infrastructure. With the innovation of Bitcoin and Ethereum, in order for people to build on top of it and to actually interact with the protocols, be able to create new business opportunities and new models, the space had to build the entire infrastructure, whether it was on the custody side of the assets, where it was clearing and settlement, whether it was creating OTC desks or market making or brokerage capabilities. We see how the classical financial services industry players do the same thing in the DeFi and the blockchain industry. So a lot of top players have emerged from this, and this has been going on since 2017. And so what's exciting is to see the maturity of all these solutions that make trading and access to these assets much easier than they were before and less clunky. And it's sort of the maturity of the market infrastructure. I find it very exciting coming from, my experience at the New York Stock Exchange, to see that, like, how people are thinking about T+2 and the implications of that for the traditional financial markets, and how blockchain can power that change. So a lot of exciting things ahead. The other thing I wanted to point out, which is very specific to DeFi and the entire infrastructure, is this decentralized exchange, what we call DEXs, that allow you to trade seamlessly, and wanted to show you a little bit how much those volumes have exploded in the past years, and I'll get into detail why they evolved so much. But you see, emerging DEXs like Uniswap or SushiSwap, which was a fork of Uniswap, really owning the market alongside, Gnosis or other players. And just to take a step back, I talked about Bitcoin, I talked about Ethereum. The innovation of Ethereum compared to Bitcoin is that you were able to use smart contracts and build on top of Ethereum ecosystem. And Ethereum ecosystem has been fueling a lot of the innovation for various reasons, including the fact that it's too successful and that people need to find other solutions to find faster and cheaper ways to trade. But you see that the Ethereum DeFi ecosystem is really front and center. And the belief that this ecosystem will continue to grow and mature is fueling in part the price formation right now of these assets, but is also giving confidence to institutions and others that beyond Bitcoin, people can enter the market also on the Ethereum side and capture opportunities on the VC side on people who are building on top of the Ethereum DeFi ecosystem. So as I've said, Ethereum has been a bit too successful in growing very fast, and has encountered issues around scalability and the price at which people can use this protocol layer. And so to answer that, there's been a lot of innovation on what we call layer twos or competing layer ones. So basically layer twos are allowing people to trade faster and cheaper, awaiting the upgrade of the Ethereum network, which is supposed to come in the coming years. And so, people can't really wait for that. There are very high gas costs, and what they want to do is create all these new opportunities to trade cheaper and faster. So that's one way of addressing sort of the clunkiness of the protocol. But the other way is to have another, what we call layer one alternative, and creating new protocols that allow you to trade better and cheaper. So for example, Solana is very high throughput. We have dedicated protocols for NFTs, two of which are on my slide, which is called Flow and Rari. So we see a lot of innovations that are sort of alternatives to Ethereum, and that we are very excited about because it's going to be a multi-protocol world, and it's going to be, there's kind of room for everybody at this time because it's such a nascent ecosystem. The other trend I wanted to highlight is the non-fungible tokens, which are, of course, all the rage in the news, and people wondering why, buyers are putting 69 million into a digital artwork. It seems incredible, but it looks to us like the future. It looks to us like the future for several reasons. The first of which is now you have totally digital, native consumers for which, digital is the first experience by which you express yourself, you present yourself to the world, you interact in what we call the metaverse, which is, internet, AR, VR. And so that's an exciting new area. NFTs, for those who don't know, are non-fungible tokens as opposed to fungible tokens, which were the ones that the DeFi space was focusing on. And so we think NFTs will be as big, if not bigger, than the fungible tokens, as it allows you to create unique representation of goods, services, assets. And so right now people are focusing on NBA Top Shop, collectibles, art, but think about insurance policies, think about debt financing, think about bonds, and there's tons of applications there. And so we're very bullish on the NFT thesis. Are there any questions? Because I haven't seen the chat, but I'll address them after.
Not right now, but if there are questions, I'll for sure let you know.
Thank you.
Yeah.
Anything else you wanted to?
Oh, no, sorry, go ahead.
So now that you've seen sort of, all the evolution and where sort of the space is going, how does this become mainstream? 2 years ago, it was still, for the selected insiders who had been in the space. Now, the space is going a little bit more mainstream with NFTs and trading and DeFi, but what is the road to adoption, and how do we see the space moving forward, right? So there's a few things. So we think crypto networks are the way forward. And by crypto networks, it really means the entire infrastructure that is based on protocols and new ways of interacting, right? So in order for them to be the backbone of our commerce and trade and financial services, there are a few important milestones which need to be true. The first of which is the advent of central bank digital currencies. Central bank digital currencies the reflection of central banks around this has accelerated significantly in the past year. There are pilots that are taking place in France, in the US, in Asia, and people are really trying to think how we can create this digital first currency, which allows everyone to have access, whether it's wholesale digital central bank digital currency or retail central bank digital currency. I was part of the World Economic Forum's central bank digital currency group, and I can tell you, and I can attest to that governments and central banks are paying attention, working with a lot of the existing banks. And so this holds a promise. China is also very active in central bank digital currencies. And so we see how important that will shape the narrative in the future. The second one is decentralized finance utilization. So as we see the acceleration of DeFi and its usage by sort of the crypto native world and some financial institutions, we believe that exposure to the DeFi returns, which are much more impressive than some interest rates that you can get in your bank, will be open to the wider public through some incumbent institutions or institutions like Coinbase, etc. And then we see this movement where corporates are thinking about putting tokens on their balance sheets. So there is a lot of issues around Bitcoin and whether there were some concerns about the sustainability of it, but people see that this is something that's here to stay, and also that it can add huge value to their balance sheets, but also engaging with customers, et cetera, who are increasingly native and comfortable with cryptocurrencies. We see also incumbents like PayPal, Venmo, and others who are using tokens and cryptocurrencies as the backbone of their infrastructure. For example, leveraging Ethereum, MasterCard, and Visa, also looking at these solutions. So people understand that the innovation that blockchain brought, starting with Bitcoin and then maturing with others, is so unique and solves so many problems in our existing financial services system that people are scrambling to see how to use that. And then finally, regulators are now taking a stance, looking at the implications from a securities law perspective, from a tax perspective, from an anti-monetary laundering perspective. Currently, FAFT has put out a consultation for the industry to give feedback on how to regulate cryptocurrencies from an AML perspective. And then finally, what was the catalyst of this evolution is Coinbase's IPO, which created a lot of excitement in the space, and also was considered as kind of the recognition that these cryptocurrencies and trading these cryptocurrencies through a regulated exchange was a viable and an acceptable activity that whether retail investors or institutionals could have access to. And I think that's really important, sort of in the mindset of, everyone can do this. This is kind of unstoppable. We need to find a way to, rightly engage with it, but it's a huge opportunity for everyone.
All right, so we got a question in. What is the best way to get started in investing in a diversified portfolio of NFTs?
So I obviously can't give investment advice. What I can say is that there's a lot of, if you want to, buy NFTs, buy and sell NFTs, there's a lot of platforms like Rarible, OpenSea, Dapper Labs, which did CryptoKitties, and Flow, which allow you to have a marketplace where people buy and sell these NFTs. And happy to share, a list of those, not to, validate them, but those are the sort of the largest ones that are in the space.
All right, so next question is, what are some downsides to NFTs?
So NFTs are whatever, people want them to be. It's kind of difficult for people to judge someone else's interest in a specific work of art. So what's exciting about NFTs is that you're able to tokenize and represent digitally a lot of things. I think currently there are still some questions about their regulatory environment, whether they could be considered as a security or not, their tax treatment, and whether when you buy an NFT on a certain platform, you actually don't get the copyrights, right? So what are the rights that you get when you actually buy and sell the NFTs? And I think that's really important that once you get on these platforms, you look at the terms of use of the platform and exactly what you're buying and what you're entitled to by buying that asset.
Okay, and then what does the future of NFTs look like to you?
So we've touched upon my favorite subject, and I'm wondering if I don't have a slide on this. If I don't, so the way we see NFTs, I do have a slide on this, is the way that we're going to be able to transact and interact in the metaverse and elsewhere. So there are two types of NFT. There's two ways of seeing NFTs. One is a purely digital, natively digital goods. So let's say you buy a sword in a game and in a tournament, and that's your NFT. And the fact that you can attest that it's yours, and you can sell it to someone else and or lend it to someone else is sort of what's powerful there. And then you also have the digital representation of existing goods. So for example, I was leading a consortia in the luxury goods space with LVMH, Aura, and it was called Aura, Prada, and Richemont. And they created a track and trace platform for the luxury goods. And you can imagine that they could also be represented by NFTs, right? So I think NFTs have a great potential to capture a lot of the commerce and trade. The other thing with NFTs is you can also lend them and get yield on them. So there's a platform called NFTFI, for example, where if you have an NFT that you bought for, let's say, 50K, and you want to get a loan to buy something else, or you want to put it as collateral, you could use that and benefit from that asset, like you could do with a house or a piece of art, a physical piece of art. So the financialization of the NFT space is going to be very important, and right now we're building sort of the bricks and shovels for that, so that we can in the future see the space grow.
All right, so I think we're going to have time for just one more question, and then we're going to have to move on. Can you give us a little more insight to CoinFund's involvement in the NFT or blockchain space in general?
Sure. Yeah. So I just put up, the overview of the firm. So we've been very early in the space. The first fund was in 2015. It was a VC fund. In 2020, we launched our liquid fund, which is our hedge fund. And basically, we were the earliest investors in NFTs. So we invested in early investors in Dapper Labs, early investors, pre-seed, seed of Rarible. We were investors in NFTFX. So all the NFT companies right now have NFT in their name. So bear with me. We're investors in NFTFI, and we're continuing to innovate and grow in the space. Our founder, Jake, has also issued its own NFTs, and so we're very deep in the space, and that's why we're so bullish about it, because we know the players, we know the time that it takes to mature. And you know, I was speaking 3 years ago at Christie's, you know, annual conference about NFTs, and people were looking at me, you know, really wondering what I was talking about. And I'm really happy that it has now come to fruition, and really excited about the prospects in the space.
All right, thank you so much for sharing your insight into this whole blockchain and crypto sector, more specifically on the NFT space. Congratulations on your new role at CoinFund, and we look forward to your further involvement in this space in the future.
Thank you. Thank you for giving me the opportunity to what we do.